Hey, what's up, everyone? It is May 10th. It is what's day? Wednesday. And here's what the market's doing. So, one thing I've been looking at for the markets is just waiting for it to retrace back to the 50% line, which is this black line right here. And then when it gets to it, you can either take it, trade right there, or wait to the 68%. But I'll talk about here in a second. So, how it works is what this blue line is right here is the day's high, and the red line is the day's low. So right now we're looking at the S&P 500, and as you can see from here, here's the day high, here's the day low. So we just wait for, I guess we can't delete it. We just take it from the top, drag it back down to the bottom, and then we wait for price to come up and hit the black line right here at the 50%. Because the way you trade for this is whichever way the day's going. Since this day was a down day, as you can see, up, down, we are looking for a short down to the downside for when it gets back up there for the retracement. And price continues to go down, never hits the black line, and here it goes. Here it hits the black line right here. So here could be the first time to get into the trade, or it is the first initial time to get into the trade. I don't take this time right here. The earliest I get in is the 61.8, because initially when price hits the 50% line right there, then the target is the 38% line, that green line right down there. But if price continues to move up and hits the 68% line, then we move the target to the 50% line right there, and we don't move it. So as you can see from this trade, is price blew through that and kept on going higher. So I'll show you what happens with that for it. So price kept going higher. We just keep leaving it the same. Comes down a little bit, hits off the 38, and then this morning it rocketed up pre-market up there. Looked like it was going to take off, and then almost right when the market opened, right before it, that was high, and it came down. And then look at it right here. It went and ticked off the 50% line to complete that trade setup right there. So the reason why I normally don't take it, the first entry at the 50%, is just because then you'd have to get in at least with the second contract, or I would have to get in with another second contract somewhere, just to ensure, or at least 61.8, to ensure you don't take a loss on it, since we're moving the stop up to the 50% line. So if you wait until at least the 61.8% line, then you don't have to move your stop loss at all and just leave it like that. And if you get in even better, then that's great. But obviously sometimes you'll miss some trades because the price a lot of times does hit the 50 and then goes right back. Let me turn on, make it a little bit easier. See, there we go. Price hits the 50 and then hits the 38% line. So that does happen from time to time. It happens a lot of time, but just one thing you got to learn to live with. And then what these rectangle boxes are is these represent the candle, the body of the 15-minute candle on it's the opening candle, the opening 15-minute candle. So at 8:30 a.m. Central Standard Time, which is when the U.S. futures markets opens, my time is I just take it from the low to the high, and that's drawn up and down right there. So what I look for is price to close outside the box. So as you can see, price closes outside the box right there. So we are looking for a downward move and waiting for the tracing back up. So when it closed below the box first, then all we do is draw to low to the high. This one today was kind of messed up because already the 50% was already hit for it. So as you can see, it already went and completed that trade, and then it went in down and hit the extended target down at the 1.146 level. So that one's kind of messed up. So going into tomorrow, this is kind of can be an either or day. What I want to look for, if price, starts off, price closes and then starts up higher, then we will look for the retracement back down to the 50%. But if price closes somewhere, doesn't break this high, closes and then continues to go down and creates a new low down there, then what we'll do is we'll look for a retracement back up to the 50% level right there. But that's basically how it works right there. So really nothing to it. That's basically it. But one thing of note right here is we do have potential 5-wave Elliott move right here. Let me show you real quick. So going up right there to right there, there's the 0, 1, 2 move. 0, 1, 2. And then the next rule is price cannot come down into the one zone right here. the 1 to 2 zone right there. So all we do is we go and we draw a retracement up to the 2, and we look for retracement back at least to the 38% line. There we have one right here, but as you can see, price broke into the 1 point and down in that zone, so that's not valid. So keep on drawing it up, and here it came down, price hit the 30%, so that is what we are going to go with right there, using that the high, this the 4, and that could potentially be the 5. But as you can see now, since the price came and made a lower low for it, now we go and move the 4 back to right there, move the 3 up to right here, and then the target we're looking for is going to be, let's draw this over right here. There we go. So the price over there we're looking for, if this target goes up and gets hit, is 41.88 here in the 5-wave Elliott move for it. But if price goes down and breaks below about 44,097, that break into this territory, and that would invalidate the 5-wave Elliott move. But that is potential target for it up there, right there. So we'll see if that happens. Should be some craziness with the debt ceiling and everything like that. Going over into the Russell 2000. Let's see, we're looking for the daily retracement for it. So here we draw the box right there, and I forgot to mention another trade I take from it is when you draw the box right there from the 15-minute opening, you take the high and low of the full candle, and then so you see how price broke down below it. It went down and hit the target down there, which is the 1.414 level. That's the target we look for. Unfortunately, in the same candle, it closed below it and hit it. So, and then went down and hit it again just to confirm it. But how I take this trade is I don't get in right when it breaks out and closes for it, either above or below. I wait until if price goes back up and hits at least the opposite move of the rectangle right there. Then what I do for that is get in. If it did go do that, I'd get in short right there. And then the exit would be at the bottom of that box right there. So that's the target you look for that. If that goes up there and gets hit before the 1.414 extension level gets hit for it. So since this is and also since it closed down to the downside, we look for the 50% retracement level for it. And price has gone up and hit it, but it has not come back and hit the go the 1 minute, make sure it didn't come down and hit. Yep, did not go down and get hit. So it is valid trade right now. Looking for the 30% line to go down there and get hit. There's that. So that's the current target we're looking for. Again, I would not be looking to get to it until at least price comes up right here to at least the 61.8%. And if it does that, then exit moves down here to the 50%. So that is the Russell 2000. Going here to the Dow Jones for today. Here's the 15-minute opening candle. We can draw the Fibonacci. Nice big long candle out of it. Unfortunately, price didn't continue back up. It closed down right there and then continued going lower to hit that target to complete that setup for it. And then going here for the 50% trade setup. When it closed down, unfortunately, it was already in it right there. So that one is already set and done for that one. Going over to crude oil, we actually have a couple of open trades here in crude oil. One is this one right here. As you can see the other day when you had that huge downward wick candle right there, I mean that goes from that $62 all the way to about $66, a good $4 just wick on that candle right there when the market opened or had an opening session from the closing session. So when it closed at 4 p.m. Central Standard Time and then opened up again at 5 p.m. Central Standard Time, they had a huge move, which you normally don't see like that. But what that did was it did create a retracement move that we're looking for, and we have a couple different ones that we're on here right now. But for this one, the target is down here, this black line, $68.38. And then we also have another one from this day right here, where you see up here. Zoom this in a little bit. See, here's a 15-minute broke up to the upside, so we're looking for retracement. Retracement, come back down to 50%, never came down and got hit. And so we just keep drawing it up until it does get hit, and it has not yet. So there we go. So that's what we're looking for right there on that black line from that day, $71.27. We're looking for it. Let's see if the MFI can tell us anything. Nope, nope. Day's coming off being oversold. 4 hours coming off being overbought. So those aren't in conjunction with each other. But eventually we will look for retracement there in the market. The only thing about it is you can't really go off the Fibonacci extension levels from this day just because this is such a big move, and then you have just the 1.414 that's being hit, and the next one look for is the 4.236 up here. But both of them are so high that it's way far away that they're probably not going to come into play to look for a reversal level for it. But we are looking for more downside in the oil market, coming down to first was about 71.32, and then down here to about $68.34 there in crude oil. With this new say, a mixed bag of cats. Retreat, unexpected build. Anyway, yep. All right, and then lastly, so for the Nasdaq, actually they bought some put options in it, just because going all the way back from last month, using this day right here, March 15th. You can see price never had, let me take that thing off. Price never had a pullback back to the 50% level, and it's actually hitting off the 4.236. And as you can see, we did have some movement around it some, and then today we had a pop up for it. What's it saying here? An easing inflation, yeah. So it did somewhat today for at least the Nasdaq market. But the markets were kind of mixed today. So it did pop up higher, but we're expecting that to be kind of a fake breakout right here from this level that's kind of been in from right there all the way to about down right there. So I'm expecting more of a move down, all the way down to around 12,800, assuming close to that high stays. If the high keeps going up, then we'll just keep moving the Fibonacci retracement level up to it. But we are looking for a decent size. It's at 13,415. Looking for it to about 12,800. So a nice little 600 point retracement here on the Nasdaq sooner than later for it. But if we go look just at the intraday charts for it today, the opening candle was super small. We had a movement here up to the upside. So when that happens, we just take this right here, and you see it came back down, didn't even close below the 50%, bounced right back off of it and completed that trade for it right there. So unfortunately, there weren't a whole lot of, there were trades, but not the ones I was necessarily looking for how I get in for it. And then if you just use this trade right there, we can see that the price, there's that candle, so it broke to the upside. So we're looking for this target up here, 1.414. Price didn't quite get there. Came down, hit the lower rectangle, so that puts the exit up here at the top of the rectangle right there. As you can see, price did go lower, but then eventually went up there and hit that. But maybe on the, let's see if on the 1 minute chart. Nope, it did not. It just blew right through it. So a lot of times the 1 minute chart that you can't see on the 15-minute chart, price will hit it and go up there and hit the bottom of the line, but then go up there and hit the top of the line all within the same 15-minute candle. This time it did not. Came down, hit the opposite way, the 1.146 extension level, used that as support, came up there and filled that profit target right there. So those are pretty much the main two or three ways I'm trading the markets right now. Pretty easy. Just instead of looking at the Fibonacci extension levels and trying to guess when the reversal is, you just wait for the pullback to happen, and if it overshoots the retracement level, then you can get in even better. And then just set my entry, get hit, and then I just wait for it to go up there or down there, depending on which one I'm trading. Just go up there and get filled. So those are the main markets. Look at Bitcoin here real quick. I had a big sell off, 28,405, and today. So Bitcoin's had a lot today as well. And, this kind of trading works for whatever. Oh, look at that big gap right there. We'll expect that to come up and get filled here sooner than later. But it works for pretty much every market that I've seen, because we can even do it for here. So we say there's 830. There's that one right there. So we have the downside. So we just go up there to that of that. and then just keep moving it down until, see, did that one go up there and get hit? Yeah, and then look, today there's the 50, so that triggers it. Hit for the 50%, close to 61.8, but it doesn't matter because it came down here and hit the 31.8 to complete that setup right there. And then actually, oh, this was actually a measured move trade. Went down there and hit perfectly off the 1.146, and then there's tons of buying action, and it's been going up ever since, closing up close to about 28,000 now for it. Let's see, longer term Bitcoin, still longer term Bitcoin, still looking at that 5-wave Elliott move for it. If the screen will load, there we go. Still looking at that 5-wave Elliott move. If price ever does get below, let's take that off. If price ever does get below this yellow line, which is the #1 point for the 5-wave potential 5-wave Elliott move, then it is null and void. But the target we're looking for is currently about $78,815. It can of course go higher than that, but as the target for this 5-wave Elliott move for me to consider it to be complete. And I think I've been talking about that ever since. Price is back around down here around the 15,000s. Just with the caveat, if price breaks below 14,170, the 5-wave Elliott move is null and void. And then last but not least, let's get the long term for the S&P 500. And as you can see, it's using, I believe it's a weekly chart. I was looking at here, yeah, using this. Here, price is hitting off the 4.236, and so the target, since it's a little bit different than using a intraday chart, I'm still researching this more to see if this is, I want to do this for like my stock trades. Is the target we're looking for is the 50% level right here, so 27.95 is what we're looking for, using the red dot to red dot, using that move. Price going up, as you see it hit great off the 4.236. So the potential target to the downside we're looking at is 2,795. So we'll see if that debt ceiling and all that stuff happening with all that news coming out, that will cause the market to go down, or eventually the interest rates that have been rising slows the market down enough to where we get a good little pop down. Still shouldn't put us as low as the COVID lows, right around here, unless the market really falls out. But that's the target we're looking for, is 27.95. All right, that's it. Have a good one. Thanks. Bye.